Deglobalization is continuing to lead to de-dollarization, and China is leading the charge here as they've just dumped a new record of US Treasuries. Now, right off the bat, because I get this question all the time, how does a country selling Treasuries indicate whatsoever that we have de-dollarization going on? Basically, for nations and large institutions, US Treasuries are looked at as cash. It is the savings vehicle, it is the reserves. And so if you don't want a US Treasury, you're going to sell it. In order to sell that US Treasury, you're going to get something in return for it, because you're not just going to it's not going to cease to exist. So you're going to get dollars for it. But what is a Treasury? It's a dollar that pays you interest. And so if you don't want a dollar that pays you interest, you definitely are not going to want a dollar that doesn't pay you interest. And so they're getting these dollars in exchange for treasuries, and then they're using those dollars to do something else. Now, every nation has their own interests and will be doing something different with those dollars, but in all cases, you're going to be spending those dollars on something, and you're going to be exchanging those dollars for something else. Now, end game here, if everybody decides to do this, that means you can't just send your dollars over to Japan or over to Germany or over to somewhere else in exchange for wheat or fuel or oil or whatever it is, because they're trying to do the same thing. And so the only place you'll be able to send your dollars in exchange for something is the place that's legally required to still accept dollars in exchange for things, which is the United States. And as dollars leave the rest of the world and come back to the United States, they do so by purchasing our stuff, our land, our stocks, our inventory, whatever it is. So that's what de-dollarization around the world means. It means a lot more dollars coming back home that could more than offset any tightening efforts by the Federal Reserve and cause a lot of inflation from all those new dollars buying up all of our stuff. But we're getting a little bit ahead of ourselves there. Do not worry about that right now. It's not going on right now. That's an end game. That's a long game situation, years down the road. But how will we get there? It starts off by countries like China selling US Treasuries at record rates. Number one, Chinese holdings of Treasury securities fell by $173 billion. That was 17%, and that was the biggest drop since 2016. So yes, that was a large decrease in holdings of US Treasuries, but they are not the only ones doing this. Take a look at the tick data from the Treasury, and we can see here, if we zoom in, China right here. Right now, we can see the latest figure at $867 billion worth. That is a lot less than it was before in December of 2021 at a little over 1 trillion. Now, not everybody is selling treasuries. I want to be very clear about that. We do have some countries like Peru down here. A year ago, they were at 28 billion, and right now they're at 32 billion. But the big boys that move the markets are selling. Take a look at Japan, down from 1.3 trillion to 1.07 trillion. And the big boys are doing enough to offset any of the small increases by any other nations, leading to a total decline of foreign-held US Treasuries. If we look at the grand total here, we see that a year ago, it was at 7.7 trillion, and right now it's at 7.3 trillion. This is central banks, nations around the world who used to be lenders to the United States government because it was a good place to save your money, and now they are saying we're trying to withdraw our savings from that bank. It's no longer a good place to save your money, and they're taking a loss to do so. The Fed has been raising interest rates, which results in a decline in the price of bonds. And so anybody who sells one of these is taking a loss. Remember, bond prices and interest rates are inversely correlated because at maturity, the principal and interest that's paid back is the same regardless of who owns it. And so if interest rates change in between the time that debt was issued and when it's paid back, that only means that the price that that debt was being bought or sold for had to change. So as interest rates continue continue to go up right now, that means all existing debt is going down in price. So anybody who sells it is taking a loss. Now, obviously, factors like trouble at home are playing into this. China right now is experiencing some bad economic conditions that are causing them to inject cash, and economic and political ties are deteriorating between countries like China and the West, and so they're trying to reduce their exposure should they ever face sanctions like Russia is facing right now. So instead, they're allocating more of their reserves into gold. Gold is obviously an asset that is nobody else's liability as long as you own it and possess it physically yourself. As we are seeing right now, there are always geopolitical concerns and risks with having somebody else hold your gold for you, like Venezuela is experiencing right now with the UK not releasing their gold, even though there's been another change in the government. Now, I understand that having physical possession of your gold is not something that's available to everybody. So if you would like to know the way that I buy my gold and silver and the best way so I know I'm not getting scammed and you don't lose hundreds or thousands of dollars by just giving up your money to people who want to steal from you, get my gold and silver buying course linked in the description below. But with a country as intent on top-down control as China, you're never going to see a return to a complete 100% backed gold standard. They just would not have the amount of control they want to exercise over their economy if they were to do so. And that's why they are trying to, yes, cut their dependence on the dollar, but also trying to increase other countries' dependence on the yuan. While Russia has become a bigger yuan user because of the sanctions, they did experience a net decrease in total global transactions. But that's not for lack of trying, and they are still actively engaging with other countries, especially BRICS nations, and allowing international trade settlements to be done in yuan. Just a few weeks ago, China said it will set up a yuan clearinghouse in Brazil in order to further promote bilateral trade. Other countries that they've signed similar deals with recently are Pakistan, Kazakhstan, and Laos. Time will tell how successful they will be, especially considering all of the troubles and problems and issues they face at home with their own local economy, imploding population demographics, and other issues with trying to top-down control an economy, their real estate market. They have a lot of problems right now, but so does everybody else. In my opinion, the lessons to take away from this are not to be dependent on any single government's currency. Why would you put all of your faith and trust, your wealth, your savings, your hard-earned money in something that is created by an entity that has demonstrated they are not trustworthy for decades and maybe even over a century? And if the rest of the world is slightly even de-dollarizing, it's probably a good idea for most of us to do so a little bit ourselves. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.